I'm Doug Farrer, and this is The World Unpacked.
The rise of cryptocurrencies like Bitcoin and its underlying technology, blockchain, could transform a range of services from online payments to global transactions. But how exactly will it shape our everyday lives?
Last month, El Salvador became the first country to legalize Bitcoin as legal tender. Other countries aren't far behind, as Venezuela just last week introduced the digital bolivar to its economy, while China is hoping the digital yuan will catch on. Are digital currencies about to revolutionize the way governments, businesses, and everyday people think about money? Joining me today is Ephrat Livni, a New York Times reporter who covers business and policy for the Times newsletter Dealbook. We'll unpack the cryptocurrency landscape today and how it may transform the global financial system as we know it. Here we go. Ephrat Livni, welcome to the show.
Hi, thanks for having me.
So let's get right into it. We've heard a lot of chatter recently about digital currency and cryptocurrency. There have been a lot of headlines, a lot of conversation around regulation, especially in the United States. I'm going to be honest with you. I don't know as much as I hoped to know about digital currency and cryptocurrency and what the difference is, especially when one is state-backed and one is sort of just out there on the internet. So can you walk me through the differences between cryptocurrency and digital currency?
Cryptocurrency is a digital currency. Now, one of the interesting things, and I think you're confused, like to the extent that you feel confused, the world feels confused, is technically Bitcoin, which was the first cryptocurrency, is the first digital currency and the most popular with the most market capitalization behind it. It was created as a currency, but it's not used the way that we use dollars, right? To transact, to buy things. It has not been until now. Now, the fact of El Salvador adopting Bitcoin as legal tender and then creating an infrastructure for Bitcoin to be used like a regular currency is interesting for a lot of reasons, but it's also interesting for legal reasons because in the United States, Bitcoin is not currently a currency. It is a commodity, the way it is characterized by regulators. However, the adoption of Bitcoin as a currency in one country can trigger the need to recognize it as a currency in other countries.
Help me understand digital currency because, I don't carry around cash. I pay for everything with a credit card, or I transfer money to my wife's account through my online banking portal. So can you just tell me what makes digital currency different from what I'm used to using now and have been for years?
When you're transferring money digitally, you are operating in a digital realm, but the actual money, like the actual institutions, all of that stuff, those are old, traditional, physical financial institutions. It involves intermediaries. It involves maybe you transfer money and it takes 3 days to get there because there are all sorts of rules about settlement and whatever. In the realm of crypto, theoretically, these are all direct peer-to-peer transfers. Now, actually what's happening is that a whole bunch of institutions have sprung up and there's actually a whole bunch of centralization. But theoretically, the difference is that one is a digital money created for the digital realm. And when we are operating now in the digital realm and we're moving money, we are simply doing a digital, it's like a digital account of a thing that still has to happen physically.
Right. So a bank still has to send the money over.
The money still has to be moved. Intermediaries still need to check who the people are that's moving the money.
So no middleman, no bank, no tax, no transfer fee, that sort of thing.
Mm-hmm.
So I'm going to reveal a little bit about how little I know about this with this question possibly, but I've thought about crypto and especially Bitcoin as being, like you said, a commodity, and it's very volatile. It's like gold, right?
Mm-hmm.
Basically, or internet gold. So, I mean, what are the implications of being able to transact in El Salvador and then potentially elsewhere. I know in some places you can buy a pizza with it, or at least you could at one point in California. So, what are these implications of the adoption of what is internet gold as a potential currency for daily use?
So we don't exactly know, because it's a very unusual, like Bitcoin was created to have a means of transaction that is outside of the realm of government control. And what it means when a government then adopts that as a legal tender and joins an global open alternative financial system, it's such a big question that I don't entirely think, I don't think that people really know. So the consequences or the ramifications are, like I said, on the one hand, is this going to change the way that Bitcoin has to be recognized in other countries in certain legal contexts? Does it make Bitcoin more popular as a transaction mechanism? Maybe, maybe not. There's a problem with Bitcoin for transacting because, like you said, the price goes up and down. And so if I buy a pizza in the morning and I don't know, I spent $10 on a pizza, and then at night that $10 worth of Bitcoin is now suddenly worth $20. I kind of got ripped off for my pizza, but maybe it's worth $5, and my pizza was a steal, but it was a bummer for the business. And so in El Salvador, they have a very, part of what's happening is that the government has created a fund to convert Bitcoin all the time into dollars, which is the actual transacting currency. And it is my understanding from people who have been there, from crypto executives who've been there and whatever, and are watching this in action, people are not really, really thinking about, they may be transacting with Bitcoin, but they're still thinking in dollars. What is value is still in dollars to them.
So you mentioned the volatility and the price of the pizza. In the morning it's 10, in the evening it's 5, maybe it's 20. So 1 year ago, Bitcoin was about $10,000 per coin. Now it's trading at about 43,000, and it's probably fluctuating right now. Doesn't this seem like a risky thing to do for a country like El Salvador, to entrust their financial system to this wildly volatile currency?
So it is very risky. And there are actually a lot of questions about the way that El Salvador went about implementing this, and whether or not it has an economy that's able to handle this kind of risk. That said, the idea that was created was to create a fund that will continually convert Bitcoin, so that even though people are theoretically transacting in Bitcoin, the government is saying, we are able to continually instantly convert this into dollars. Therefore, there will be no risk. And then it also creates the opportunity that people could hold on to it if they wanted to engage with that risk. But theoretically, the government is taking away all the risk from the people and taking it onto itself. Now, who funds the government? The people. Ultimately, if there's a bank, if there's a run on that fund, if for whatever reason something goes awry, it could fall back on the people. There are numerous risks. There are also the risks of attaching oneself to an open financial system. There are risks with volatility. There are countless risks, but there's also the advantage of being the first country and sort of grabbing the moment.
So while the president of El Salvador is extremely excited about this and, has been pushing for this, the Salvadoran people themselves sort of mixed. I've read about protests. Is this kind of like a forced experiment from a president who's obsessed with cryptocurrency? Or, do you think that, I hate to ask you to make a wild prediction, but do you think the people of El Salvador will come to see this as a positive thing over time?
I think it's probably, this is not going to be satisfying. I think it's a good and bad thing simultaneously. I think he will face criticism and get praise simultaneously. I think that there will be people who protest, and then there will also be people who come around to it. There's already all of that. And it's it is true. So one of the big arguments that the crypto community makes is that adopting Bitcoin will foster financial inclusion because it will put everybody who has a mobile phone give them the option to join a financial system. So that's arguably positive. But the way that the law was adopted it was announced at a Bitcoin conference in Miami. It was announced in English. It was passed very, very quickly. There seems to be very, very little preparation. There seems to be very little clarity. So I don't know what the people of El Salvador will do, but I think that it's a simultaneous, it's not necessarily there's not a single answer for this.
What is it about El Salvador and potentially other countries that makes this appealing? And might we see it proliferate? Is it a lack of a very powerful banking sector? Is it mobile phones? What are the kind of qualities of countries that you think will be the ones the most eager to adopt crypto as a legal tender?
So I don't think that it depends on the country. It doesn't really depend on the technology of the country. There are billions of people in the world who don't have access to bank accounts, who do have mobile phones, who are touted as the ostensible beneficiaries of a crypto economic sphere. Yeah. And the reason that El Salvador can adopt Bitcoin and make this argument on behalf of its people is because there are supposedly 70% of the people are unbanked, but the vast majority of people do have mobile phones. And so that is a quality. The quality of like being unbanked or underbanked is a quality that makes crypto adoption theoretically useful, but it's not necessary. And I think one of the things that's interesting in the US is that there's a lot of talk about like underbanked and unbanked. That doesn't mean you have to adopt Bitcoin. Like there are ways to change a financial system or to improve the technology surrounding payments, banks, or even to create a different kind of credit system, which is one of the things that crypto offers. They don't necessarily have to involve any of this.
So there's one element of cryptocurrency that you reported on and that's been talked a lot about, and that's the environmental impact. Obviously, the mining of cryptocurrency, which is essentially revolves around using many computers, lots of electricity, is basically a big drain on energy. So, can you tell us a little bit about that environmental impact, and then how it might become more sustainable overall as more people in more countries adopt crypto?
It does require energy, right? So these computers run, they solve math problems. It requires a lot of energy. The question is where do you, just like all energy, the question is, where do you get your energy? So arguably, none of this is a problem if everything is being done through renewable resources. And so some of the discussion around greening crypto right now is like, actually argues that by creating mining environments like that, they can help to ease the transition to a renewable resources grid. So for example, I cannot store wind power, right? And I cannot store solar power. There is no battery, but there's an argument that Bitcoin acts like a battery, because if I mine wind power while there's not a lot of use for it on the grid, only my mining facility needs it, then I'm taking that wind power, I'm turning it into money, and then that money is stored value. In El Salvador, they, I think, said that they mined like a little tiny percent of the Bitcoin with geothermal energy last week.
With a volcano, as I understand.
Yeah. And I gather that's a thing that's done elsewhere in Iceland. There are things. I mean, so in Wyoming, they try to like siphon energy off of gas flares, I guess, to mine crypto. So yes, it demands a lot of energy. There are ideas about how to make it consume less, but a lot of it depends on access to renewable energy.
When we come back, I'll ask Ephrat about China's new digital currency, the future of U.S. regulation of cryptocurrency, and where all of this is going over the next decade. Hey, thanks for listening to The World Unpacked. If you're enjoying the show, leave us a rating and be sure to subscribe to us on Apple Podcasts, Google Podcasts, Spotify, or wherever you get your podcasts.
China has created its own form of digital currency.
Media reports in the US suggest the Federal Reserve is working on a so-called blueprint on the future of money that could be released as early as this.
So last Friday, China announced that all cryptocurrency activities are now illegal. So can you tell me a little bit more about why they did that and what the implications are for crypto and for China?
I think there are various arguments. So some people argue that China is banning crypto because of its own digital yuan development. There's also an argument, though, that actually the reason that some people think it has nothing to do with crypto, actually that it has to do with China's very, very, very well-developed payment system. So there's a lot of digital payment going on in China on private payment systems. And that theoretically the adoption of the digital yuan and sort of like the driving all of that, trying to drive crypto out and drive everybody toward the Chinese digital currency would theoretically give the government a lock on sort of financial monitoring and just driving business away from private entities and toward the government's currency. Like there's not one reason to do it. There are a lot of reasons.
Sure, although I guess Bitcoin and its sort of unregulated financial system is something that the Chinese government's clearly concerned about. So you could see why they would be worried about that. So instead of cryptocurrency, you mentioned China has introduced a new digital currency called the ECNY, or the digital yuan. What are China's goals with adopting the digital yuan?
So the idea is that some people say, as I noted earlier, that the idea is to drive people away from the private payments system that they have. They have a very, very, very highly developed digital payment system. People use, I believe, Alipay and WeChat quite a bit. And those are private entities. And so to the extent that the government would like to monitor everyday transactions or be able to control a person's access to their finances, driving more and more people into a system where they're relying on the digital yuan would theoretically do that and would enable the government to play a bigger role in monitoring and controlling access to money. That's my understanding.
So is it safe to assume that with China's new digital currency that they are leading the way for a newly transformed international monetary system too, in addition to their worries about kind of shifting away from private payments? And is this also a geopolitical play and a shot at the US dollar's dominance in the global economy?
It is. And certainly there are people who argue that it is. And then there are people who argue that the primacy of the dollar is not going to be shaken because the question is, do people really want to use this? Do you really want to use a digital yuan? I'm not sure that anybody else will want to. And I'm not even sure that that's really what China was aiming to do. I do think it's supposed, there are a lot of people arguing that it's a threat to the primacy of the dollar. I think that it's not that the dollar can't be threatened, but I'm not sure that the digital yuan exists as a threat to the dollar.
Is that because there's really not that much difference in the minds of people who are, using different kinds of currencies for transactions between the digital yuan and the regular yuan? I mean, it's basically about trust.
I think it's about trust. I mean, all currency is about trust. And so if you look like around the world, people who buy expensive things, they buy them and they cite the price in dollars, like the dollar, no matter where they are, in many, many, many countries in the world, the dollar is sort of like the way that people think about value for big, big transactions. Could that change? Like, sure, it could change, but it's going to be hard to, replace the dollar. It's going to be hard. And even in the world of crypto, while there's so much discussion of the promise of crypto, there are cryptocurrencies that are pegged to the value of the dollar that enable transactions precisely because so much of this money, this so-called money that's being traded, doesn't operate like money. And so you need to tie it to another digital currency that operates just like a dollar.
And those are stable coins, right?
Exactly.
So I want to talk about that really quickly since you raised it, because I read in one of your articles and elsewhere that the stable coins could potentially be a real systemic risk to even the global economy because, if there's a sort of a run on the digital bank, if they're pegged to the dollar, is there enough? Do these places have enough assets to cover the stable coins that they have out there? So can you talk a little bit about how maybe both stablecoins and then crypto in general could be a systemic risk to the global economy?
So the use of stablecoin as crypto activity goes up, so there's more trading, there's lending, there's borrowing, there are a whole slew of new kind of products that are created from this. And so the more types of products and transactions and things there are to do, the more use there is for a crypto that sort of locks in value at the time of transaction. And so that's what a stablecoin does. Theoretically, it's like each token, let's say it's a dollar-backed stablecoin, each token is worth $1. Yeah. And the way that it's pegged is that the company has reserves, cash reserves, ostensibly has 1-to-1 cash reserves, $1 for every single token that they're minting. Yeah. On the internet. So that's the risk. The risk is that people are minting money, but there's no actual real money. Theoretically, there may not be the real money behind it. Now, if we all want to convert our stable coin at the same time, and there's no dollar for me to take out, because you took out all the dollars on your stable coins, that creates a risk. And if you think about that exponentially on a global level, that's what people are worried about.
It makes sense, and you can see why regulators would be so concerned, especially with the growth you mentioned. And I mean, it's exponential, obviously. Crypto's swings wildly, but in general is growing at an incredible rate. So, but setting aside the regulation, Jerome Powell at the Fed said that the U.S. is actually thinking about adopting its own digital currency. So can you tell us a little bit about where the U.S. is on that?
So it's very far. I'd say it's very far away. I think that what he's saying is that they want Congress to weigh in. Like he wants Congress to weigh in on this, and that if the U.S. is to proceed with a digital dollar, it will be because it will have been considered by Congress. Is my understanding.
If you're waiting on Congress, you're probably waiting a long time.
And it will be a long time, and maybe rightly. So one of the things that's very interesting is like crypto moves very fast. And so people feel like a lot of pressure. And then people are always like, oh, the government is so slow. The government is so slow. But, it's not, because it's not obvious what comes of all of this. It is fair, arguably, to move slowly in the United States, where the dollar is strong and most, like, the access to financial services is relatively, compared to some places, good. We have a different set of considerations here than in El Salvador.
You're right that the United States has sort of a very advanced financial system, and obviously the dollar is the dominant currency for the world for trade. But you mentioned also that El Salvador got huge benefit out of adopting Bitcoin as a first mover. If the U.S. is slow and late to roll out a digital dollar, will that put us at a disadvantage relative to, say, China, who's plowing ahead with the ECNY?
I think it depends who you're asking and what their interests are. I don't know that the U.S. is disadvantaged compared to China when it comes to innovation. I find it very, very hard to believe that business people would be clamoring to go to China, but they were running out of the United States and clamoring to go to China. Like, I understand that there are certain lines that are often used by crypto companies. And it is true that overly strict regulation or like an indifference to a digital economy could drive out innovation. I'm not entirely sure that it is true that US businesses have gone abroad to take advantage of the crypto sphere. They have not gone to China to do that.
Well, I hate to put you on the spot because as noted, it's changing every day. But so it's gone mainstream, but TBD about what will happen in crypto and El Salvador and the United States and China and Venezuela, wherever. Can you just kind of give us a couple, if you're willing to, predictions about how crypto will be used, say, a decade from now?
Okay, I'm going to say something that is like ridiculous. So this is not my prediction. This is a prediction of the crypto venture capitalists. Yeah, this is, I am patently not a like this. The argument would be that like in 10 years, you're not really going to be buying physical goods. Like you're not going to care too much about your physical goods. Like, I don't know. Say you want I don't know if you want a Gucci briefcase, but assume you want a Gucci briefcase. You want your Gucci briefcase.
A Gucci briefcase, sure, yeah.
And you want to move it around from your gaming system to, I don't know, your wherever it is that you sell your social capital now, and you know what I mean? Like there's a whole universe being created where you could make money off your personality and carry around your Gucci bag, which you spent more on than the physical bag. Like in this future, we'll all be online all the time.
Our entire lives will be lived online, is what you're saying.
Yeah, and we maybe won't even like care about the physical universe. Like we will care more. And the reason I say that branding thing is like the idea is that we will all the hallmarks of whatever respectability or like sophistication or whatever that you had in the offline world will be transferred to the online world.
And crypto will be the currency of choice.
And crypto will be the mechanism by which we pay for and move and operate all these things.
I mean, does that seem, I know it's not your prediction, but do you hear that and you're in this world? Does that seem likely to you? I mean, I could certainly see crypto being the online currency of choice, but I feel like this is a reflection of a cultural movement around cryptocurrency that may have a wild view of what the future will be like. I mean, I hate to have you go on the record, but I've got to know, what do you think of that prediction?
So I would say that given the alarming rate of development of postmodernism, I'm so sorry, this might come true. Like this, we live in one of the reasons that absurd things might be possible is that we live in a sort of blown up time, like just like the meme stock frenzy, like everything is amplified because everything is happening online on social media. And it's like things are amplified. And so things that seem impossible to you now could be very possible very quickly, it seems to me, based on the recent developments.
Ephrat, that is an incredible prediction.
Sorry. I'm
okay.
So sorry.
I'm glad for our listeners who stuck around for that. That is a wild prediction. And, in 10 years, if it does come true, you can have my Gucci bag. So,
oh, thank you. It will be very expensive. I'm not sure you'll want to give it to me.
All right. Well, I think we'll leave it there, but thank you very much for coming on the show and explaining a very complicated and important topic to us.
Thank you for having me. It was really fun.
Hey, thanks so much for listening. We want to hear from you, so email us at podcasts@ceip.org. And you can find me on Twitter at Douglas L. Farrar. That's Farrar. If you like the show, please hit that subscribe button and leave us a review or a rating. The World Unpacked is produced by the Carnegie Endowment for International Peace. Our audio engineer is Tim Martin, and our executive producers are Cliff Jayapranada and Clarissa Guerrero.